And that is my cue. Thank you very much. And welcome. We have, thank God it's Friday. It's raining here. I did like a little old lady. I sat down and I fell asleep, just like my mama used to do. And before I forget, happy Father's Day to all fathers out there. This Sunday is Father's Day. And especially from a daughter, I have to tell you, dads are very special people, very complex, very complex. Daughters and mothers have a very complex relationship, and fathers and daughters do too. So happy birthday. It's not easy being a daughter, and it's not easy being a father, I'm sure. And it's not easy being a mother. And I'm sure it's not easy being a son, Jonathan. Except if I am your mother, then it's so easy, right? Mm-hmm. Right. What else? Ana Chavez, this is your moment to let me have it. What do you mean you have emailed me a lot and I haven't responded? I've responded to all the emails. What happened? My question is, if I were able to buy the program, I sent, if you registered one time, you don't have to register again. I say again, if you register one time, you don't have to register again. So if you've already received an email saying, thank you for registration for yesterday, that's it. You're in the system, you're in the list, you will get an email from me. I will say it, well, you can try to do it again if you want to. I think that it would get rid of the duplicate names anyway. So I don't know if you have, I thought, okay, Nancy, thank you, Julie. Okay. And yeah, that's enough, because the one on the radio show is the one, there is only one link that asks you just for your name and your email, and that's it. And then that goes to the list. It should put it there like little ducks all in a row, and then I can get that list from there, send you information, and that is the email that I am going to use to communicate with you, and the one Melly's going to use. And we're very excited. I was so excited last night I couldn't sleep, because I've so many ideas and I want to make it worth your while. But today, I am happy to say that unless he fell asleep when he was sitting down, Jonathan?
Yes. Hello, everybody.
Where were you?
I have been here the whole time.
Yeah?
I was just
So
hiding.
how come you didn't say how easy it was to be my son?
So I have something very fun planned for you guys.
No, we're gonna clear this up. I don't care if there's how many hundred people watching. What do you mean?
He was getting all this stuff ready.
I'm also just giving you a hard time.
That's why. Oh, okay. All right. So you didn't hear it. Okay. Just tell me a straight scoop. Don't play games.
No,
with
I
me.
heard you. I'm just going to give you a hard time about it. I love you too, Mom.
I love you too, mi amor. Okay. All right.
So-
But see, don't let him get away with that kind of stuff. All right. Or he gets sassy, and no way. Huh.
Yeah, you got to have a little bit of fun in business, right?
Apple doesn't fall far from the tree.
Uh-huh. No. Cuentas claras. Cuentas claras. Okay. All right. What? I'm all ears, honey. Enlighten me.
I got some fun stuff to talk to you guys about today. I'm going to kind of touch on what my mom talked about on Wednesday regarding relative strength. And then I'm going to go into a little bit more about how we can use relative strength to trade, a trading strategy that relies on relative strength, and then show you something that I've been working on with my mom and one of my really good friends from college, Nathan, to develop a tool that makes trading a little bit easier if you want to go down this route. So without any further ado, let's get started. Actually, before we get started, Carolina, you had a question on Wednesday that never was able to get answered. Did you get an answer today, or did you still have that question?
Now, do you hear me?
Yes, I do. Hello.
Hi. It's me again. Yes, my question was about the days, because I noticed on stock charts that depending on the days you said, like, I know Julie said 3 months or 90 days, but it changes a lot when you move it to 60 days, 30 days, or 2 days. And I feel, what does it mean if I set it to 1 week or 2 days from now? Does
That
it
is
mean
such a good question, because she's talking about long-term trend and momentum, which is exactly what you're going to talk about, right?
Yep. So
Yep. It's
that's
very
actually a
important,
perfect
both
place
of
to
them.
start. Yeah. So
Yeah,
they are both
you
very
hit it
important
right on the
because
nose.
there is a big difference between what has been the best performer and what is the best performer. So to briefly touch on that, I'm just going to try and get this chart up on the other screen, but it doesn't want to play nicely with me right now.
Kevin, everybody's worried about your hair. They're asking what happened to your hair. So you better do something, because you're freaking us all out.
There's what I was
You
looking
put
for.
in a
Okay, great.
ponytail.
So without further
I'm sorry,
ado,
we're
let's
talking
go
hair.
to the other screen. So Carolina's question is awesome. It is, we set this little date range in the bottom over here to be whatever time frame we want to look at. So we can look at 21 days, which would be for the past month, or we could look at maybe 63 days, which is the past 3 months. But all of this is not showing complete performance. For example, this line up here, this teal line around 30%, shows that energy is up 30%, but it's not 30% gross, or sorry, it's not 30% return. It is 30% better than the zero line, which the zero line right now is the S&P 500. So when we're looking at perf charts, we are looking at relative performance, or as I like to say, relative strength. So what we're seeing is from 3 months ago, everything started at zero. So we're having a race. All of these different sectors are all running the same race, and they all start from the starting line. The gun goes off, everyone starts running, and then 3 months later, we see where they all are. So we see that energy, compared to the rest of the market, outperformed the market by 29.43%. So that means that its lead over the S&P 500 is 30%. Just as if we wanted to look at staples, we see that it's 16% lower than the S&P 500. That doesn't mean that it lost 16%. That doesn't mean that energy made 30%. That just means compared to the S&P 500, energy was up 30%, and compared to the S&P 500, staples was down 17%. Now, up in the top left here, you see this little gray box that almost looks like a button. That button means that our zero line is the S&P 500. So we are comparing everything to the S&P 500. Now, what if we wanted to compare it to something else? Now, up here, we have all of these little boxes. And if we click on them, it will then make that line be our zero. So we said that staples was the worst performing sector over the last 3 months. So if we click on staples, we now see that staples has become our zero line. So everything now is compared to staples. So we see that energy outperforms staples by 45%, that utilities outperformed staples by 5%, so on and so forth. So this is a really good tool to be able to compare different equities or different stocks over a certain period of time. So
By the way,
right
if
now
you
we're
click on the
using
little
3
color,
months.
sorry, Jonathan. If you click on the little color, on the little box with the color itself, and it turns like even in Staples, go to Staples and click the little purple. No, click like you had it before, and then now click on the little staple, on the little box, the color, where the color, there you go. So that it turned there, now it disappears. That's how you get rid of that one industry, that one sector. So it doesn't take it into account at all. Jorge, don't you look at this. You keep driving.
So just to quickly...
Eyes on the road.
So this is comparing things over the past 3 months. Remember that this is only trading days. So even though there are 28 to 31 days in a month, we say that the average trading month has 21 days of trading. So how would we find this? Easy. Stockcharts.com. If we go to stock charts, we get to here. Then we have charts and tools up in the top left. Perf charts down here. And then we go to predefined groups and we click on sector ETFs. So S&P sector ETFs under predefined groups. Now it may give you these bar charts, which is one way to look at it, but I prefer to look at the lines. So if you want to see that, down here in the bottom left of the graph, next to the slider, you see there's a little line and a little box that says show line chart. You click that and ta-da, that's how we get here. This is awesome information because it allows us to compare a large amount of stocks or sectors or markets against each other and see how they've performed over a period of time. But the one thing that this doesn't do for us is say who is doing better today. I don't care who has done the best over the past 3 months. I want to know who is the leader today. And to find that, we can't look at the perf charts. We need to look elsewhere. And this is where we turn back to our relative strength. So we're going to look at relative strength through point and figure. So say we want to compare the discretionary sector to the S&P 500. So the way that we'll do that is up here where it says enter symbol or name, we want to type in the two things we want to compare. The first one you type in is what you want to look at. So I want to look at how the discretionary sector has done against the S&P 500. So discretionary is XLY. Then we're going to put a colon, this little 2 dots, and then we're going to put in what we want to compare it to. So this is where we're going to put in our S&P 500 or $SPX for the S&P 500 large cap. And then if we hit Fuakata on go, this is what we get. This is no longer price. We are not looking at something that costs $41.12. We are looking at how XLY, or the discretionary sector, has performed compared to the S&P 500. So the $41 is not a price. It is a ratio. It is how much more the discretionary sector is worth compared to the S&P 500. But really, because we're not looking at buying and selling these comparisons, we're really looking at two things. We're looking at short-term direction, and we're looking at long-term trend. Anna, to your question, the 21 days is the number of trading days. So you can't go and trade stocks on a Saturday or a Sunday every month, just like you can't trade stocks on Martin Luther King Jr. Day. So 21 days is the number of days the stock market, on average, is open per month. So whenever we have to do a check for, if we want to get 1 month worth of information, we'll take 21 days as our month representation. So going back to the chart, we want to find two things here. We want to find short-term direction, and we want to find long-term trend. And this is super easy. We've gone over point and figure before, so what I'm going to say should be familiar to you. When the relative strength chart is in a column of X's, that means that the stock that we're looking at is outperforming on the short term the stock that we're comparing it to. So to put that into this example, we currently see that we're in a column of X's. This column is going up, so we know that even though we see a 5 and a 6 here, we still know those are X's. So because we're in a column of X's, we can say the discretionary sector is currently outperforming in the short term the S&P 500. If we were in a column of O's, we would say the opposite. We would say that discretionary is underperforming the S&P 500. So that's our short-term direction. Now, long-term trend is a little bit more tricky, but I'll give you the easiest way to find it out. Class participation time. Everyone in chat, what is, when we're looking at a point and figure chart, what is our buy signal? Lucia, if you want to find what the symbol for the sector is, I recommend going over here to Charts and Tools and then Sector Summary. This will give you the sector ETFs for one company. It is the SPDR or SPDR sector funds. So all of these are owned by SPDR Holdings, and they are the 11 different sectors we look at in the market, plus they use SPY, which is their S&P 500 ETF. So, sorry, I think I may have asked the question slightly wonky, so blame the teacher. What I was looking for is our buy signal for point and figure. Yep, Maria got it. When the current column of X's goes above the previous
Celeste
column.
got it too.
Yeah, lots of people are getting it. So what that means is right here, I don't like this annotation tool. I liked our old one. Right here, make it be thick. Oh yeah, there we go. Now we're talking. This red line is the previous column of X's. Then anything above that means that we hit a buy signal. However, remember, this is not a single stock. This is not the company that we're looking at. This is a comparison. So we're comparing discretionary to the S&P 500. So instead of this being a buy signal, instead, for relative strength, a buy signal, quote unquote, for point and figure means that discretionary, or what we're comparing, is outperforming in the long term what we're comparing it to. So here we could say that because our most recent signal was a buy signal, that discretionary in the long-term trend is outperforming the S&P 500. Now let's see how that would look if we had it backwards. Let's say, for example, we were right here. Say we went back in time and we looked at this day. We take the same rule that we had for our buy signal for point and figure, and this time we're going to flip it. So instead of it being that we're looking for where the X's goes above the previous column of X's, we're going to look at where the column of O's goes below the previous column. So this red line right here. So because we see O's below the previous column of O's, this point that I have the arrow pointing to means that that discretionary is now in the long-term trend underperforming compared to the S&P 500. Now, I know this was a lot of information. We'll do it a couple more times, but just to say things very simply, short-term, we look at the X's or the O's. X's means that we're outperforming whatever we're comparing to. O's means we're underperforming. short term. Then we look at our buy or sell signals for point and figure. Our column of X's going above the previous column, our column of O's going below the previous column of O's. This will tell us if we're in a column of X's above the previous, that means that we're long-term outperforming. And if it's a column of O's below the previous, we're underperforming long-term. Silly question, there's no such thing as silly questions. If you put $SPX and XLY, is it the same? It will be the opposite. So if we did $SPX and XLY, it should be the same. Now something's weird. It is different, and I know why. My apologies. It's different because these numbers that we're looking at are prices. This is comparing the price of one to the price of the other and giving us a ratio between the two. That is strange, though.
Just divided by 100. It's the same number, 2431. No? Oh, no, 4112, sorry.
That's very interesting. I need to get you an answer for that. Yeah, I need to get you an answer for that. Let me write that down. Are there other sector ETFs besides the spiders? Yes, there are. If you want to see a list, I would recommend going to etfdb.com. And you can see a full list of all of the different ETFs that are available. And then there's another question. Why does it matter and why is it important what order you put the symbols in? So the first symbol that you put in is what you want to look at. And then the second symbol that you put in is what you want to compare that first one to. So for example, here we're looking at XLY and we're comparing it to $SPX, which is our S&P 500 index. How does this help make a buy or sell decision? Good question. Well, let's use a little bit more of a general question. Say I was an investor and two different stocks went on a buy signal today. Say Tesla and Apple both went on buy signals today. And I want to figure out which one would I rather buy. So what I may do is I may do this. I want to compare Tesla to Apple. So I compare Tesla to Apple. And I see that we're currently in a column of X's. So short term, Tesla is outperforming Apple. But if we look at our columns, we see that the most recent resistance barrier that we passed was right here, where we had our column of O's go below the previous column. So this would tell us that we're in a short term, that Tesla is outperforming short term, but underperforming long term. So depending on how you're investing, you may want to use this as a way of figuring out if you had to choose one or the other, which one you may want to choose. If you're a short-term investor, you may go with Tesla. If you're looking at a longer-term investment, you may go with Apple. So you can use these charts as another way of comparing two different stocks today. Not how it's done, only today, which is really important.
I have the answer to the other question.
You do. Awesome.
Yeah. Which one do you have on now? Sorry.
Tesla versus Apple.
Okay. It gives it to you in the language of the first stock that you wrote. So the 272 is the price of Tesla. Okay, if you now put Apple at the beginning and Tesla second, see, it's going to show you here that it's at 226. Go ahead and change it. Apple first and Tesla second. Am I looking at the right thing? Are you changing it?
I'm trying to.
Oh,
but
okay. No. I know
Tesla's
why.
also up above $1,000. It's price ratio.
Okay. See, so it's in the language of the first company that you put in. So it's telling you that in comparison, this one is $34.94. That's the price of the Apple. See, go up where the prices are. More?
These aren't prices.
Yes, they are. See there where it says open, high, close, low. All right. Those are prices. And when you change a Tesla compared to Apple,
So you want to look at Tesla versus Apple again?
yeah. You're right.
Yeah, let me look into this because that is a great question and I owe you a better answer
Open
other than
269.
I'm not 100% sure.
Interesting.
Sorry, let me just write this down.
Very interesting. You're right, Jonathan. My apologies.
Very, very interesting. I will do some digging. I will come back to you guys on Monday with an answer to this. But all of this is going towards something that I want to talk about. So before we go any further, I want to know if anyone has any questions. The most important takeaways from what we've talked about is being able to find the direction, which is our X or our O, and then our trend, positive or negative, depending on what column has surpassed the previous one. Does anyone have any questions regarding any of this, or I'll give a minute or two. Can we go over the O's again? Sure we can. So here we see that Tesla against Apple is in a column of X's. So because we're in X's, we say it is outperforming short term. So this one, Tesla is outperforming Apple short term, correct? If, for example, this this far right column didn't exist, and this was the last thing we had, we would then say we're in O's. So for the short term, all you need to do, check what the most recent column is. If it's X's, it's X's. If it's O's, it's underperforming or it's O's. The numbers are not prices, it's a ratio between the price.
Yeah.
So kind of wonky, but the easiest way to describe it is it's the price of Tesla divided by the price of Apple times 100. Elizabeth, so when we have a column of, so remember how we find point and figure bisignals. We're looking for where a column of X's goes above the previous column. So right now, we would say that this red line is our buy line, and anything above it would be a buy signal. Now, we do the same thing, but in the opposite direction. We just, flip it upside down a little bit. So we find the O's, and we want to find where our column of O's falls below the previous. So we would draw that same line from the previous column, underneath the previous column of O's, So if we go below that line, like the arrow is pointing to, that means that we're now in a quote unquote sell signal, or that long term Tesla is underperforming Apple. And because we use percentages, that is why the difference is likely happening. Because we're looking at comparing two different prices. ¿Puedes aplicar esta gráfica en español? Nunca he podido. Mom, would you be able to help provide a better explanation? Because I can understand, I just wouldn't be able to explain it clearly in Spanish.
She's asking between the two, you're comparing between two companies, which is better. Well, you do it in the short term. Okay, when you're looking at this one is in excess, Tesla is in excess, so that means that it's better than Apple, it's stronger than Apple in performance right now. And another way of doing it is when you go back, remember we used the perf charts, and then we compare it at the bottom, the relative strength of one versus the other. Do you know what I'm talking about, Jonathan?
Yes, I do.
Okay. Oh, I thought you were going to go there.
Yeah, no, there was someone in chat asking for the explanation in Spanish. Sí, hay una diferencia como los X o los O. En el X es
bueno.
el primero compañía está mejorando como el segundo, y es una columna de O's. El segundo está mejorando como el primero en ahora, pero hace más tiempo estamos buscando para las columnas que es
la última señal que tuvo.
Sí. Estamos buscando para el señal que es esta columna es abajo del último, o si estamos mirando una columna de O, estamos buscando para abajo del última columna. Lo siento, siempre estoy practicando español.
O sea que a corto plazo, el grado que le estamos dando a al primer símbolo que pusimos. Aquí esta gráfica nos enseña a Tesla. ¿Cómo es que Tesla está comparada con Apple? Si está en X, quiere decir que Tesla está ganando a corto plazo porque está en columna de X. Pero a largo plazo, ¿en qué estamos? Estamos en una señal. La última señal que hubo fue de compra o de venta. La última señal de compra fue a 288, ¿lo ven? Pero allí bajó entonces la O, bajó más baja que la otra O y canceló esa compra, esa señal de compra. Así es que mirándolo desde la derecha hacia la izquierda, la última señal que hemos tenido fue de venta, porque fue de O's, no fue de X. Si se fijan arriba, todavía no hemos tenido la señal de 304 de compra. Así es que corto plazo está en X o en O's. Si está en X, estamos hablando del primer símbolo que escribimos. Si está en X, está más fuerte el primer símbolo. Si está en O's, está más débil el primer símbolo. A largo plazo, si está en la última señal que tuvimos, fue de compra de X, entonces Tesla está a largo plazo más fuerte que Apple también, pero si está en O's, como está en esta, que la primera señal hacia la izquierda que encontramos es de venta, no de compra, es de O's, quiere decir que Tesla está más débil que Apple. Resumen, short term, Tesla is stronger. Long term, Tesla is weaker.
Yes.
See it? So that means that it's building up momentum from a weaker position to a stronger position. Does that make sense to you now?
And then there's a lot of people asking what 286 means. So let's look at that, and I'll actually do out the math so everyone is on the same page.
You have a calculator?
I have wolframalpha.com. Oh, goodness. If people have never used this website, students, this website will save you. This website is like a calculator to the best degree. It can do formulas. It can solve for X. It'll do your algebra homework for you. Still do your homework, kids. Tell your mother
Jonathan,
you
you
love
used
them.
to use this?
Oh, yeah. All the time.
Really?
Oh, yeah.
Really?
Yeah.
No wonder you did
This
your homework
website
so
got me through
fast.
calculus. It
Hmm.
is awesome. So let's look at this. Let's
We're gonna talk
see
about
where this number is coming from. We have 286.20. So that number is going to be the price of the first divided by the price of the second. So if we take Tesla, the price of Tesla closed at $1,000.90, then we divide that by 349.72, which was the closing price of Apple, and then times it by 100 because we want a percent, which gives us 286.20. That number looks familiar. So that's where we're getting that number from. And the reason that Apple versus Tesla doesn't look the same is the same because 5 divided by 7 is not the same as 7 divided by 5. So it's not 28% better than Apple because the stocks cost different amounts, which is why we look at it, which is why we look at the comparison between the two. So the price of one divided by the price of the other times 100. So if we did this backwards, if we took our 349.72 divided by 1,090, so the price of Apple divided by the price of Tesla times 100, we get 34.94. There's your 34.94. And that's the reason that the charts don't look the same, is because we're comparing, one is on the top of the equation, then one is on the bottom. When we flip them, sadly, it's not the same thing. But hopefully this made it a little bit clearer. Mystery solved, yes. Good job, gang. Any other questions on this? I know we kind of got a little bit sidetracked, but I want to make sure that everyone kind of understands. Oh, there was somebody asking, how does 10% trailing stop matter here? We don't look at 10% trailing stop. 10% trailing stop is a rule of thumb for selling off stocks when you owe them. Or sorry, when you own them, not owe. When you're looking at point and figure, just point and figure, there's only two things that matter. It's whether the current column of X's is above the previous column, or whether the current column of O's is below the previous. Because our point and figure buy signal is the same thing as our point and figure sell signal, but flipped. So again, let's use the Tesla versus Apple example.
Or not.
Man, my computer is not happy today. So our most recent buy or sell signal, we look at our current column of X's. So we are currently right here. We look at this column. We see that our current column of X's hasn't gone above the previous. And correct, Janet, we don't care about volume when we're looking at point and figure because not every one of these X's is only one day. We can have many X's in one day, or we can have many days with no X's. So we look at our current column of X's to see if it's gone above the previous. It hasn't. because the previous column of x's is up here. So we step one column to the left. Now we're looking at this column. It's a column of O's. So now we're not looking for if we've gone above the previous column of O's. We're looking if we've gone below. So we want to look at the previous column of O's, which is right here, and we draw our line below the column of O's, not above, below. And we see that this O is below that line, which means that our most recent buy or sell signal for this relative strength chart is a sell, or that tells us that Tesla is in a long-term negative trend compared to Apple. There's a question. So what you're doing here is the same as sharp charts with the lines where you compare more than 2 shares. So this is only looking at 2 shares. And with this, we're not looking at how something has done over 21 days. This is all every moment in time. Which one is doing better than the other? So we can only compare 2. We can only compare one against the other, but we can look at it in every single moment in history, which one was doing better. So that's the beauty of this, is it lets us look at today, which one is doing better. So let's now compare some sectors, shall we? Because we've talked a lot about relative strength, but people are asking, how would I use this information? Well, sectors make investing simpler by eliminating the number. You only need to look at 11, or I guess 12 different tickers to look at all of the S&P 500 and figure out what you want to invest in. So instead of looking at comparing Tesla versus Apple versus Microsoft versus IBM, you compare technology to discretionary. So if we do that, we have our technology sector, which is XLK, and we have our discretionary, which is XLY. So here, I want to look at technology and see how technology is doing compared to discretionary. So we boot this chart up. And this is a very interesting chart. This is a perfect chart for me to quiz you guys on. What is our short term? What is doing better short term? Technology, which is XLK, or discretionary, XLY? Short term. Everyone's getting it. So technology, we see is we are currently in a column of X's, which means that what we're comparing, which is XLK, is outperforming short-term XLY, discretionary. Now here's the hard question. What is doing better long-term? I'm still seeing a lot of correct answers.
So smart. You're so smart.
All right. I'm gonna ask one of you guys to raise your hand and volunteer to explain
Kevin,
to us
did you get it
why.
right?
Someone's got to raise their hand and explain to us why, because I feel like you guys are just, you know, it's a 50-50. You can guess at one and it's either right or it's wrong. Who wants to put their money where their mouth is and give us why they think why XLK is long-term better? Carolina, this is technology versus discretionary. No takers? I hope I didn't scare her. Christina, yes. Hello.
Hello, can you hear me?
I can.
Yes, mujerasa.
So
All right, what
I
you got
think-
for us?
So it's the XLK, the O hasn't dropped below the previous column of O, so that means that it's long-term, also long-term trend. How do you call it?
Yep, long-term trend. So our most recent buy or sell signal, what was it and where was it?
The most recent.
Buy or
sell?
sell.
The sell was the,
Go column by column from the right to the left.
Yep. So we can start with this column right here.
okay, so then the buy would it be 83?
Yes, it would be
83.
83. So because we didn't reach that, we need to go backwards one more. So now we look at this column of O's.
For the sell signal.
Right.
Yeah, remember now it goes down. O's go down.
So the sell signal was, or will be, the 75.
Yes.
Yes. So because we didn't go below that, we step it back one more time. And now we're here.
So that the buy signal there was
You got it.
80.
Yep. So the buy
80
signal
points.
here was right there. So because our most recent signal was a buy signal, what does that mean?
That it's also the short-term buy signal. I mean, it's short-term long trend as well.
Yep.
Yes.
I forgot how you say it. It's overperforming basically.
Yes, it is outperforming discretionary in the long term, and you
And in this long-term and short-term.
nailed
right?
it. Yep. And you gave a perfect explanation of it. Thank you so much, Christina. That was absolutely perfect. Thank you so much for speaking up.
Thank you. I was just making sure I understood what you said.
No,
Now
you
you get
understood
it?
it perfectly.
All right. Thank you.
Of course. Thank you. Awesome. So that was my explanation. I think Christina explained it way better than I could have. So thank you so much for that. I'm grateful. So let's put this information to a little bit more use. We have now figured out how we compare two different sectors. That is great when you already know what sectors you want to compare. But that's only comparing two. Remember, there's 11 of them, and this one chart we looked at is only comparing XLK to XLY. But what if I wanted to look at XLK compared to XLY, XLV, XLRE, all of the different sectors? How do I do that? The way you do that is, sadly, by hand. If you wanted to figure that out, the easiest way to do it is to take every one of these charts. You go in and you write, okay, XLK to XLY is in a column of X's and is in a buy signal. Now, here is where my shameless plug comes in. I have worked with my mom and one of my friends, Nate, to develop a piece of software that we don't do anything that, the last thing I ever want to do is try and sell something that we give, that we're privileged. We have information you don't. No. We use the same information. We teach you guys how we get this information. This tool only makes it easier. So we've just gone through how to do one comparison. So let's look at XLK right now versus XLY. Remember, we are in a column of X's and we're on a buy signal or a positive long-term trend. What we have created is a dashboard that gives you all of those comparisons all in one place. So let's look at what we had before. We have XLK versus XLY. We have XLK. We go across to XLY. We see we're in
Make
a
it bigger,
positive.
Jonathan,
Yeah, I can do that.
please. Bigger. Thank you. That is very big.
So this box that I have highlighted down here, the P and the X tell us two things. It tells us we're in a positive long term,
You guys take a picture of that.
and we're in a column of X's for our short term. So that is one chart that we've looked at right here. And every one of these is another one of those charts. So we don't do anything, this isn't doing anything that that everyone in this class can't do on their own today with what we've taught you. This just does it for you. And it does this every day. So this is only for today. This report is for June 19th, 2020 in the market. We're not looking at how the market did over the past week. We're not looking at how it did in the past month even. We're only looking at who are the leaders today in the market. And we can look at that again using our two different things we've already talked about. We have our X count, which tells us how many things we have in a column of X's. So this X count means that we add up all of the X's across all of these different comparisons. And in total, there are 7 X's for the SPY. And then we do the same thing for our positive trends. We take our long-term positive trends and add those together. So these numbers that you see are the number of good signs that we have. Our X count is our short term, and our positive trend is our long term. And again, all of this is done every single day. So tomorrow, you'll get a completely new chart showing what the changes for that day were. So how would I use this information? I would use this because this allows me to see what sectors compared to all of the other sectors are leading. So if I sort them by total, we can see that the leader right now is technology, followed by discretionary, but both are doing the same long term, but technology is performing way better short term. This chart is done every day when the market closes. It runs and updates the chart 30 minutes after the market closes. So by 4:30 p.m. Eastern time, this chart already has the information for that trading day done. So this will give us information about what sectors are leaders. So then I don't have to go through and do all of these relative strengths. All I can do is I can say, okay, you know, technology is a market leader. Let's see how technology is doing today. All right, getting close to a buy signal, real close to a buy signal. I'm going to keep an eye on that. I'll come back to it tomorrow. All right, how's discretionary doing? Let's see discretionary. Okay, it might reverse into a column of O's here soon. Maybe I'll put that one back away, and if it decides that it wants to do better, I'll come back to it. Okay, communications. And you can do this. You can make your decision of what sectors are leaders easier so that you save time having to do relative strength charts and you spend more time getting to decide what you want to invest in. Can we know what industries inside the sectors are doing the best?
Oh my gosh.
Are there industry ETFs to compare?
Carolina, you like to complicate your life.
No, that's a great question. There are. There are industry ETFs. However, you would need to most likely go to ETFDB and find out what sector ETFs there are for those, or sorry, what industry ETFs there are. Not all of them will have ETFs, and some ETFs may not have enough trading volume to have the amount of data that you may want. But the answer to your question, yes, there are industry ETFs within these sectors. And it is our goal eventually to be able to add both bullish percent, which we'll talk about another time, and add industries to this So once you find the leading or the hottest the hottest sector, then you can go and find the hottest industry within that sector. But for today, this is the current chart. Now, remember when we started all of this, I said that perf charts, the bad thing about perf charts is that it compares, it's a race. It shows how something did throughout that race, not what place they finished in. Now, it is important to think about how things are performing today, but we do need to think about, is technology a leader because it's always been a leader, or is it maybe on its way back down? The same thing for discretionary. Maybe discretionary used to be as strong as technology was and is losing ground. You don't want to buy into a sector just because it's at the top, because it may be falling. I would rather look at something that's maybe second or third place, but gaining ground still. So to do that, we can make our lives super easy, and we just scroll down. So this, well, I'm going to scroll down a little bit further. What you see here is the relative strength matrix from June 12th, last Friday. This was what the chart looked like. Now, if we look at technology, technology only had 12. So its positive trend of 10 hasn't changed, but its X count has jumped in 1 week from 2 to 11. So we see that change here of technology jumping by an X count of 9. So this table is showing us the difference between 1 week ago and today. So we see that technology has 9 more X's now than it did last week, just as XLE has 4 less positives than it did last week. So here is where you can get your information about who is gaining ground, who is catching up to the leaders, or who may be falling behind. And all of this, you can choose what time frame you want to look at. So we can look at 1 week, we can look at 3 months, we can look at 1 day if we wanted. So we can see just from yesterday to today, energy's X count has gone up by 6, and they've gained 1 positive trend as well. So XLE is super interesting to me. So let's maybe go look at that, because they're gaining ground. Okay, so maybe not just yet, but we may be looking for energy to show if they can keep up this momentum, or if by Monday they lose this 6 that they've gained and another sector comes to take their place. So this is a lot of information, but again, our goal here is to create a website that you can go to, sit down, and it saves you time. It doesn't do something for you that you can't do yourself, because we will be here to teach you how you can do this yourself. All our goal is with this product is to save you time and to let you think about bigger things than just typing out a bunch of relative strength charts over and over and over. Because we've had 5 or 6 people so far send in their relative strength charts that they've created, and they've said, this is awesome. I love this information. I'm never writing this out by hand again. It takes a lot of time, and I love using this tool because it saves me a lot of time where I get to focus on my job, not having to decide, oh, well, I can go look at all these different charts and figure it out. No, I can just look at this one page, and in one easy view with lots of pretty colors to help you out along the way, what is the leaders? Who are the leaders? Who is gaining ground? Who is losing ground? And this is only the starting point. We intend on adding in more information as this tool develops, but if this is something that's interesting to you, as you see, the program is done. the program works, you can use it, and I actively use it. And you can start using it too, starting next week or the week after. We will be making this tool available for purchase for everyone that wants to join. The spaces, like the webinar, will be limited, so we will not have hundreds of thousands of people being able to sign up right away. We're going to start off with about 20 to 50 beta testers, but we want to help make your investing easier, and we want to make this tool better for you. So if you're one of those first 20 or 50 people, you will have a say in what we work on, how we make this tool better, how we can help you invest simpler. So the name of this product and the name of our company is Sectors Made Simple, because we don't do anything you can't. We just try and make it simpler. So if this is something that you're interested in, please shoot us an email at tudineroconjulie@gmail.com and we can add you to our newsletter. We'll have some more information coming out early next week, which will include a sector recap. So you'll get to see how me and the other developers would use this tool to make our purchase decisions. And you can learn how you can get more involved and use this information yourself. How much is it going to be? It is going to start off at $499 for a year, and then that is for the beta testers. The rate will go up from there as we add more features and as we have more people. And it's not just going to be the matrix. What I've done with you guys today is class 1 of a webinar series that we are going to have. We're going to have weekly webinars in which myself, my mom, and Nate, who is the primary developer for this, are going to sit down and talk with you guys, help do education. We will do matrix analysis. It'll be everything from education to advanced testing using this tool. Everything you need to take you from what is sectors and what is sector rotation to I want to understand BPI and understand how BPI evaluates risk of a sector. If that means nothing to you right now, stick with us because it will mean something very quickly, and that information will help make investing a lot easier, give
And
you a
this is
lot less
only
choices.
part of the story. Jonathan, they have gone back and back tested it to see if, like you say, okay, I'm comparing it. You know how, Carolina, you asked the question wisely. How do I know? Should I look at a week? Should I look at 10 days? I mean, you hit it on the nose. Well, they asked themselves that question too. So what they did is they went back and back tested this, comparing it every week through the good times and the bad times in the market, comparing it every 2 weeks, every month, every 3 months, every 9 months, every 12 months. And the computer went back and did all of this and gave you the results of this is how you would have done by investing in the top sector during those periods of time. And we have the results of those back tests, which are incredible. So the whole premise here, the whole philosophy is that there's always a bull market somewhere. So what this does is granularly, but not as granularly as industries, okay, or companies, that's coming, but not yet, is which sector is the leader. And I showed you in a presentation before where, and I will show it again sometime, where I show you that in 2019, the market may have lost money or made money, but this one sector made 3 times as much had you been in the right sector during the time. The S&P 500 is only one choice, the spider, but you can choose the sector that isn't always the leader, and you can go back and see, okay, I want to look at it every week. I want to look at it every month. Jonathan, where were, and this is not the only way you can use this, but according to the back testing, what were the best results?
I'm pulling that up right now so I can share it.
Okay.
Let's see if this is going to play nicely. Okay, it will. So I'm not even going to show this yet. I'm going to say one thing first. This is a case study. This was us in 2019 looking back in time to say if we used this strategy, how would we have done in the market? We are not fortune tellers. This tool is not our magic ball. We can't promise you that if you follow what this case study shows, you will make money. There's always risk in the market. Past results cannot guarantee future returns. With that said, this is a case study that Nathan and I wrote in which we tested a strategy where we set the momentum table, which was this table that we looked at comparing a previous matrix to the current one. If we look here for an X count of greater than 2 compared to a 2-week, so this is a 2-week strategy. So we look at the 2-week chart. We're looking for anything with an X count greater than 2. So that would be XLV, C, K, and P. And that same sector has a positive trend of greater than 5. So that would give us XLK, XLC, and that's it. Yes. So it would only give us XLK and XLC. And then we would buy the highest positive trend value one. So that would be XLK. So we created our program, or we created a portfolio to go back in time and trade this strategy that I just showed you over years. So we wanted to see how that actually looked. And the results of that study are not in that spreadsheet, or are not in that document, sadly. So let me see if I can find those. Someone said, can your program help with options trading? I dabble into it and a little bit, and it could tell what sectors are going up. So it can tell, it does not look at results. We are looking at only relative strength. So that is important to remember. All of that is looking at relative performance. So even though XLY could be outperforming XLK, that doesn't mean that XLK made money. That just means that XLK did better than XLY. So unfortunately, I can't find the charts, but I can give you the numbers, and if people are interested or you don't believe me, please email me and I can send you the charts.
No, you don't need to
Using
send
the
them
strategy
charts.
that I've provided here, this strategy, if we tested when the market crashed in 2008,
Make them do it by hand if they don't believe you.
it resulted in a profit of 20% when the market lost 30% of its value. Now, in a good market, our strategy still performed well, outperforming the S&P on average over the past 20 years. Our strategy outperformed the S&P 500 by 11% return year over year. So that means regardless of what year it was, on average, if you traded this strategy, only looking at your portfolio once every 2 weeks, only trading once every 2 weeks, you would have made 11% more than if you had invested in the S&P 500 alone.
Which means you only had to look at your portfolio once every 2 weeks. You don't have to be looking at it every day.
And it's black and white too, because you don't get a choice. If you follow this, you follow this. But the beauty of this tool is there is no right way to do it. There is no one formula that is the only way to do it. You can choose how you want to invest. You can choose your own strategies. All we try and do is make sector investing simpler.
Carolina, the very important question you just asked. So if you choose the right sector, it will always outperform the S&P 500. No, when we had the horrible meltdown during February and March recently, nothing was doing well. Everything was losing money, including this program. So yes, it may have outperformed it, but it was still losing money. So the question is not, are you outperforming it? The question is, are you making more money? You know, are you making money? Period. Are you making money? Because remember that relative just means that you're better, but you could both be horrible. Right? It's like this, I like less worse than that one, that kind of thing. You want to make money. You don't want to be just losing less money.
Yep. So we have two
Did I just confuse
questions
everybody?
here.
And I gave them the worst figure. I gave them the worst dates. I looked for the worst. I mean, I put them through the ringer. I said, okay, go back now and do this date. Now go back and do this date. Go back and do this date. And they did. And I saw the numbers. And you'll be able to see the numbers. I was just kidding. This is all very transparent. And this you can all do manually. Or if you have an Excel, you can program it for Excel. You can do whatever. This does not use Excel. Nate programmed this from scratch.
All right. I think we have two hands raised, Emelita and Carolina. So we're going to start with Emelita. Unmute, please. There we go.
But my question was in the beginning when you were asking about how can know is more strength and positive strength. And when I do, because I know the program ends in February, Julie talked about that, the programs, and I have everything in my note. So when I decided to do like an experiment and how much market work and the mentirita I put technology first for a long time. And I compare with the other sectors like health, like a consumer, and I noticed that technology is strength, is like strong, keeping it strong, continue long term. So that's why I say, okay, technology is more strong between compared with the other sector.
Mm-hmm.
For the other statistics. That's why, and that's I made my conclusions. I don't know if I'm right or not.
Well, but it didn't do it from January to December. You know, it may have done it sometimes, but other times it didn't.
Yeah, only this, yeah, you know, because when you explain to the programs, I put all my notes, and because I don't know about the program, I try to...
You're an animal.
Yeah, myself, you know, how I can learn more about those. And I think the program is amazing.
Yeah.
So that it's more like a...
Yeah.
So,
I just don't know why nobody's done it. You know, because it really is a very simple, you looked, huh? Yeah.
Okay.
I have everything in here.
There is
one place.
There is one place that does it, and it is a person who is, well, Tom Dorsey, and he makes it available if you want to pay over $5,000 a year.
Wow.
And it is only really available to people who own portfolios or are trading with other people's money. There is nothing and nobody who is doing what we're doing here
for the
people.
For the pelagatos, arrastrapanzas like us, there's nothing like this.
Yeah.
So this is pretty good. They did a good job.
It is.
All right, and then Carolina, we have a question.
Yes, my question is about expenses, because I'm learning the ETFs and I realized that they have expenses, and I wasn't aware of that. So if we trade very often ETFs, isn't it very expensive?
Well, mutual funds are more expensive than ETFs. ETFs are a lot less expensive than mutual funds. Have you compared them? In fact, that's why people like ETFs so much, is because they have less expenses, and they give you they're a bit more tax effective than mutual funds are. So no, it's not, even taking after the expenses, you're still doing better.
Okay, thank you.
You're welcome.
So
Jonathan?
while we're going through questions, I just posted a file in chat if people want to download it. It is the one-pager that kind of
Okay.
just talks about the main things that I talked about here, gives you a little bit more information about how we create the matrix, as well as information on how you can get involved if you want to make this part of your trading strategy. So moving forward, I believe we have one last question from Carmen.
Hi there. Can you hear me?
Yes, I can.
Yes.
How you
Thank
doing?
you. Thank you so much for this. This is amazing. But my question is slightly off topic. Is that okay?
Of course.
Thank you. So I was doing the paper trading on my phone. I downloaded the app, Stocks Tracker, and then the Webull. And so I was trying to figure out how to do a 10% trailing stop. And I only see how to set alerts with specific amounts, but not the actual percentage. And so the same thing with Stocks Tracker. It looks like in order to set more than one alert, you have to buy a membership. Not sure if that is correct or I'm completely doing it.
No, I think in Stocks Tracker, you're right. I paid extra one time many years ago, and I can do as many alerts as I want, but I think it's because they grandfathered my plan. But
Okay.
I don't pay anything any month anymore. This was when they first came out. I downloaded it and then I paid, I think, $9.95 or something one time. And that was it. And now I get all of the extras. But I didn't realize that everybody else didn't get it. Plus, I don't get ads. So that's pretty good. In the bull one, Jonathan, you showed how to get the percentage. Now, I do the same thing with mine, but I didn't use the pretend. I use I'll tell you, simulated holdings. Is that what you used?
For Stocks Tracker?
No, for Webull.
Oh, for Webull. I think I used, what did I do? I just went to the set alerts. I'm not sure. I went to paper trading first, I believe.
Okay, see, I didn't do paper trading. I just went, first I did a watch list. Then I went to each one of those watch lists. Okay, like for example, I did Julie's stocks is my watch list, okay?
Okay.
Then I went into one of them and, yes. And then I pushed here on the bottom and it says simulated holdings. So I pushed there and now I can put the buy in there.
Wow. Okay.
Then you put save and now you have two things. Now when I get my watch list, I hit on the right and the three dots in there and it says simulated holdings. And now it shows me all of my simulated holdings and that's my portfolio.
Okay.
Okay, and now what you can do from the watch list, well, you can do it actually from anywhere. You just check where it says alerts. And when I sell shares, by the way, today I took the Nata out of one Zoom, Net, Datadog, and Adobe. And I was telling everybody Zoom is like a skinny cow that can hardly walk anymore, but it's still giving me milk. Is if I put edit this list, and then there I change the number of shares that I own in that. I just subtract them.
Oh, so manually you do that. Okay.
I do it because I trade with TD Ameritrade, so that one does automatically. But what I did is I just put how many shares I sold of each one, and then and how many I have left, and then so I verify it. But I love this. I love Webull. Jonathan, that was one of you gave it to us. Who was it? Was it you, Carolina? No. Who was it? Somebody
I think
gave it.
Elazar mentioned Weeble.
No. It was a girl. It was a lady.
Daniela mentioned Stockmaster.
Daniela. I think it could have been her. But this is awesome. And I don't have an account with them. And they don't bug me because I shut them up. And the alerts are awesome. See, my alerts, I had 11 alerts today. And you can set it so that it tells you when something important in your stocks happens. Like today, Adobe hit a 52-week high. Datadog above 52-week high. ServiceNow did above 52-week high. So whenever something happens that not just the prices that you put in, but anything happens, even if you don't have an alert on that stock, just because you have it on your watch list, it gives you an alert.
Okay.
It's really cool.
So I guess I was a little confused with the alerts and the actual trailing stock. Like if you get alerts, it'll just tell you, okay, the buy, it's getting closer to the price, to the buy price.
It will tell you whatever you set the alert for. If you set it at a percentage, it will tell you it went down 10% or 5% or whatever. But the thing is for you to put the alert for you before the actual thing happens. So you get a wake-up call.
Okay, but it doesn't automatically sell it.
No, because this is only between you and your program.
And the program itself. Okay.
Yes, because once you put it in your broker, that's it. You're committed. It's going to happen. But here you tell yourself first. And I give myself time to, make mistakes and get nervous and get into my brokerage and the password and all of that. So I give myself a little cushion so I can take a look at it. And then I decide, okay, am I going to take some money out? What am I going to do?
Okay.
So it's like a cheat sheet for you.
Well, thank you so much, Julie.
Okay, and if you have any questions, email me to Dinero con Julie, because I use it and I love it. I love it.
Yes. So far, so good. I like it too. I just
that. But I still have my little stocks chart there because it's still my security blanket.
Perfect. Thank you, Julie.
Okay, you're welcome.
All right. If there are no more questions, I think we're going to be ending class.
I just wanted to say that there are a couple of people that got a little bit confused or want additional information about the matrix. I am open to doing another class to talk about it if you guys would like, if this is something that is interesting to you. Additionally, when the tool releases, it's not that you have to pay to get any information. There is going to be free articles on the website as well. So even if you don't want to buy the tool, but you just want to learn more about it, we'll have a bunch of articles that you can come and read for free to help you learn everything you need to know in order to be able to read the matrix and to understand it. But if you are confused or if anything you want to review from today's class again, this video will be posted on Facebook, as well as I will be around. So if you guys have any more questions in the future or want to talk more about the matrix, I'm always here. It will not be a one-time payment because we're going to be continually developing the product. If you get in at a price, that is the price that you will be paying. You will not pay more. You are grandfathered into that price. So if you are one of our early helpers, if the tool ever goes up to $1,000, you're still going to be paying your $500 a year. So we're not just selling this tool and we're disappearing. This is going to be something that I work on as my day-to-day job, and it is something that we continually will develop. So I hope that you guys join us. If you can't join us at the beginning, I hope you guys join us somewhere along the road, because this tool is for you guys. It's for the everyday investor. It's not meant for the person who's managing millions of dollars. It's meant for those who have some money set aside and want to learn how to invest smarter but don't have the time or don't want to worry about getting bogged down with hundreds of stocks to compare. We want to just make it easier or
it's going
simpler.
to cost you the 500, which means you have to justify that cost. If you're making less than that a year, it doesn't make sense for you to get it. So it's not for everybody. You should have, what was the amount that we came up with?
Over the past 20 years, 98% of, if you bought the tool and invested more than $4,000,
Yeah, so we said
98% of the time, if you just use the 2-week strategy that we tested, that 2-week strategy will pay off your $500 and make you profit 98% of the time. And that's only if you follow one rule, never change that rule. If you want to invest your way, you're probably going to invest a little bit smarter than one rule for 20 years.
So that's why we say at least $5,000 to have it make sense. If not, it doesn't make sense.
Yep, and we'll be very honest about that. Again, we will teach you how to do what we do here. We're not going to tell you that you need to buy our tool. It's the only way. We'll give you the resources to do it too. But our goal at Sectors Made Simple is to make sector rotation simpler. Save you time, save you money, and help you make a little bit more along the way. So that is my whole spiel. Thank you guys for listening to me. It was definitely more technical and more advanced, but thank you for bearing with me. Ask more questions. I will always be here, and I love talking about this stuff. So please send them my way. So you guys are all the best. Thank you so much. Have a great weekend.
Have a great weekend and happy Father's Day.
Happy Father's Day. Take care, everybody. Bye.